Hey, welcome, guys. It is Wednesday, July 16th. This is in preparation for Thursday, July 17th. Before we jump into the market analysis, we are finishing up that chapter in the Market Wizards book, Interview with Top Traders by Jack Schwager, where he's finishing interviewing Brian Gelber. Uh, says, let's see, one of the last things he said was most traders fail who have large egos and cannot admit that they are wrong. Um, Schwager says, in other words, successful trading is a matter of trying to avoid losses, not being afraid of them. And Brian Gelber says, that's a good way to put it. I am not afraid to lose. When you start being afraid to lose, then you are finished. Is the ability to accept losses a characteristic of a winning trader? Asks Swagger. Brian Gelber says, yes, Tom Baldwin is a good example. He only trades the market. He does not trade size or equity. By that, I mean he does not say to himself, I am long 2,000 contracts. Oh my God, that is too many. I have to sell some. He never looks at it that way. He will sell either when he thinks the market has gone up too far or when he thinks that his position is wrong. In your trading experiences, is there one particular trade that stands out as the most dramatic? Yes, in 1986, when the long bond was being cornered by the Japanese, there was a big emotional rally on a Monday morning. I had thought that the market was too high at 90, and here it was trading at over 91. So I sold 1,100 contracts, scale up above that level. The market backed down and was offered 1,000 lots at 91. Just as I was thinking that I had this trade nailed, in less than 5 minutes, the market reversed and soared up to 92. I was down, I was down $1 million, and the market was only a few ticks away from hitting limit bid. I had never lost so much money so fast, and it was because I did things differently than I normally do. What specifically? Asked Swagger. I usually don't trade that big early in the year. I like to make money gradually at first and then play with the money I've made. It sounds like part of your money management philosophy is based on treating each year independently. He said, right. Anyway, I sold a little bit more up at the highs, and from that point on, I was only concerned with covering. I waited patiently and for the market to start coming back down. I ended up losing only 400,000 for the day. Not at all bad considering where I was earlier. But that trade had a big emotional impact on me. I was flabbergasted by the market action. I had forgotten that the markets could run away like that. I could not believe how wrong I had been. Um, what is the key trading rule that you live by? Never add to losers, says Brian Gelber. Swagger asks, what does the average trader do wrong? He overtrades and begs for tips. How do you handle a losing streak, rather, said Swagger. I instinctively trade smaller, and sometimes I just take a break. It is good habit to wipe the slate clean and to start fresh. Swagger says, when you are going bad, but still have some good positions on, do you liquidate them as well? He said, absolutely. They are bound to turn against you. Um, and the last thing here that Swagger's saying in his summary, he said, finally, Gelber's reaction to losing streaks is one sided by a number of traders. He advises wiping your slate clean and starting fresh. Getting out of everything allows the trader to achieve greater clarity. Liquidated positions, even if they still appear attractive, can always be re entered once the trader has regained his confidence. So, this is good to see and hear that, every single great trader goes through these confidence shaking moments and how they handle these things. Okay, in the market analysis here, we've got pardon me. Um, this is the daily. You can see that we still have not closed below this 62, 63, 25 or above the 63, 23, 50. We've still not closed above or below that. Currently, still, even though the LBR slow line is back down towards the zero line. Matter of fact, we're negative 3.73. Uh, I'm sorry, I said the slow line. That's fast line. The slow line is still up. We're still in this same pattern on both the the ES as well as the SPY. You can see that same thing here. So this is cautious, even though we're just kind of going sideways here. We want to be aware of that. The my radar screen has it as a buy for tomorrow, still for a second day flip up in the 2 period rate of change. So we can show that same thing here on the SPY as what shows on the ES. And that was we had a down day here, a down day yesterday. Today was the first flip up in the 2 period rate of change. This is the SPY. And you show that same flip up on the ES. So usually you look for 2 days flip up in the 2 period rate of change, and then so it's giving me a buy signal based on the 2 period rate of change, anticipating a second day flip up in that. Whereas interestingly, the Nasdaq has a sell signal on that. All right, wanted to pull over the 65,000 tick chart. Just show. If we're going to eat this tail, well, let me pull that back out of the way. If we're going to eat that tail there on the daily, go back down and eat into that. Here's what I would anticipate on the 65,000 tick chart. I would anticipate to see us, we came down here. This is the 20-period moving average, this red here. I would anticipate to see us fail this 20-period, not regain strength and come up here. So if we're hovering somewhere around this tomorrow morning, that would be kind of interesting. I would expect us to kind of push back down and start eating into this tail if it's going to do it, and not just necessarily wait for the U.S. market. So I would be cautious if we open. This is around 6290, 6300-ish zone. If we open up above this 6290 tomorrow, it would be interesting to see that. So again, I would expect to see a failure off the 65,000 tick 20-period moving average on that. On the internals, let me get back to the internals. Come on, grab a hold of it. There you go. Okay, on the internals, you notice that we had this pretty good spike up. Here, I'll zoom in on that. Pretty good spike up in this. Our 1870 was where we were looking at being, short if we were above 1870, and that was based on 3-point move up off this 1570 down here. 3 points to move up is 1870. We did spike above that, but we closed back down below that. So now that left this new spike up here at 1948. 3 points down from that is down here at 1648. So I'm monitoring that, and here's interesting on the 2-period or the 2-minute chart. This is where we exceeded this 1870 up here when we spiked above it. Then we came back down below it. So I also have marked on my chart this 1648. Let's bring these over to the right on the labeling. So I'm going to be watching this 1870. If we're back above that, it would bode bearish. If we're down below this 1648, it would bode bullish, given the overall internals 3-point move theory. And I forget at this moment who was the one that kind of came up with that idea. Linda Raschke talks about it, but she always gave credit to this other guy, and I at this moment don't recall. So if you know who that was, let me know if anybody else is listening besides our little group here. But anyway. All right, guys. I think that's it. That's all I have for tonight. Basically, I'm going to be watching these points on the VIX. 1648. If we're below that, look long. If we're above 1870, we can look short. Again, I'm looking at if we're going to fail and go back down and eat that tail, I want to see us failing off of this 20-period moving average on the 65,000 tick chart. Had a little bit of a bullish divergence down here on the 65,000 tick chart on the fast, the LBR fast line. We did not have the slow line divergence yet, but we do have that on the fast line. So, all right, guys, happy trading tomorrow. Tomorrow is Thursday. Let's trade safe and go for the right setups. We'll talk tomorrow.